But whatever were gains to me, I now consider loss for the sake of Christ. Philippians chapter 3, verse 7. In the New Living Translation, that verse also says, I once thought these things were valuable, but now I consider them worthless because of what Christ has done. I know someone is thinking, how on earth does this have to do with anything to do with business, faith, and finance? Well, the highlight there is the fact that sometimes we think something is great, it's amazing, it's profitable, it's expensive, it's valuable. But in reality, if you look at it with a different lens, you actually realize that it is not as valuable as you thought it was. So what am I talking about? I'm going to stop talking in riddles. The last time we looked at different items or different terminology that related to your business to help you count the cost. Those were items that were normally found on a profit and loss statement and items that were normally found on an income statement, profit and loss income statement. It's all the same thing. But it was basically telling you about the performance of your business on a day-to-day basis, on a month-to-month basis, year-to-year basis. But there is another report and financial position that you need to look at your business from. You need to have the lens that has to do and relates to assets and liabilities. Now, assets and liabilities are things that you find on a balance sheet. Now, I don't want to bore anyone with any accounting, with all this accounting technology, but in simple language, we are basically saying, what is the actual value of this business? Take away all the fluff, take away all the fancy stuff, that we like to look at, the nice website and the pretty logo and all of those kinds of things. And when we strip the business back, if we had to liquidate, if we had to sell for any reason, what is the actual value of this business? Now, we live in a world where you've heard, and I'm sure seen maybe on the news, you hear some crazy valuations. This business has been valued at £3.5 billion. This business has been valued at $10 trillion or whatever it is. There are so many different valuations out there that give a value to a business based on not just how it's performing, not just on physical items, but also based on perceived value. And I'm sure you've also heard companies or names mentioned where people have gone and bought a stock or share in a company, bought a company or gone to a company thinking, this company is the best company, it's worth X trillion amounts of pounds. And in a little while, you find out that the company is actually folding up. It's being liquidated. It's being closed down. In fact, they're sacking employees because actually what they thought they had in value is actually not worth much. It's not going to pay the bills. So let me break down assets, liabilities, and last but not least, very important, cash flow in line with the examples that I've just given. An asset is everything that your business owns that actually has value. Not the fancy website, not what people think, but actually physical items like your laptop, your building, if you bought a building, your physical things like if you are a camera person, you've got items like cameras. If you have inventory, stock, physical things that you can actually sell. These are assets, yeah? These are things that can be turned quickly into cash to pay for things or exchange for other items. And then you have liabilities. These are things that your business owes or has but doesn't really have value. So for example, you might be running your business, but somebody has given you an invoice for £1,000 and you have 30 days until you need to pay that £1,000. And so on paper, in your bank account, you might have £1,500 cash sitting in your bank account. But in reality, the fact that you have a £1,000 unpaid invoice actually means that you only have £500 valuable to your business, £500 asset in a simple way. Yeah. So an asset is what you own that adds value to you and your business, and a liability is what you owe or something that will cost you. And so when you look at your business from this lens, you will soon see that it is possible to be profitable on paper, but in reality, you can actually be in negative, you can actually owe, and your liabilities may actually be higher than the assets that you have as a business. So this leads me into another key term called equity. Equity is the value of your business that you have after subtracting liabilities for assets. And back with what I said before, it's possible to actually have negative equity. What is yours in the business after you have paid all loans, gotten rid of all debts, all those kinds of things? You need to be aware of these numbers. So equity is basically your assets minus your liabilities, and it gives you the true value of your business. Not all these inflated valuations that we see online that actually don't hold any weight, but the real cost and the real value of your business. Now, as I try to put everything together, let me talk about cash flow. It is possible for you to have on paper loads of sales that have been made. But if the cash for those sales is not coming in, you might find that apart from also potentially being profitable on paper, but not actually being profitable in reality, you also run out of cash. Cash is king, they say. Maybe cash is queen for the ladies in the house. Cash is actually what you use to do business. It's possible to be profitable on paper. It's profitable to be profitable today and run out of cash tomorrow. And when you see that businesses are going into liquidation, you see that businesses have run into trouble, the reality is not that they don't have anything worthwhile, but it is that they don't have the actual cash to back up the value and the perceived asset that they are saying that they have. And so this is where you see a so-called X trillion pound, billion pound company actually having to get rid of stuff, because in reality, you need to pay staff cash, real money, not the valuations that you see in, on paper. And so this is very, very important. I want us to look at our business, not just from the lens of profitability and sales, but from the lens of assets versus liabilities, and also from the lens of cash flow. If your business was to be sold, what assets, physical assets, would you have? Could you liquidate to add to you as a business owner? And also, okay, yes, it looks like you've got great assets, but actually, reality, what is the cash flow that you have in your business? And is that enough to actually run the business, pay for the bills that need to be paid so that you can continue your operations? Many small business owners do not pay attention to these things. They just keep on selling, keep on buying, keep on selling, keep on buying, keep on selling, keep on buying, keep on selling, until one day they finally realize that actually, okay, although I've been doing all this buying and this selling, I have actually not made any money, or I'm actually owing the bank, for example. If you've got loans with the banks or whoever it is that you may have taken money from to start up your business, you might find that you're owing rather than actually making a profit. These things all come together in line with the points from the previous video and other videos. They all come together to help in terms of you counting the cost and making sure that you understand what is happening in your business. Now, I know that might have been a little bit technical for some people, but don't worry, we will break it down to also apply to our individual circumstances in the next video. So stay tuned if you want to know about assets and liabilities from a personal point of view, and I will see you next time. This has been Business, Faith, and Finance with Benedicta.